We define accounting as a transaction, recording, and communicate. Transaction, business activity produce transaction. Hmm? As an accountant, we are going to analyze transaction and record as our new accounting language so our company and users can communicate by providing financial statement. That's why we define accounting as three words: transaction, recording, financial uh, statement communication. First step, we analyze transactions. How? Debit, credit, increase, decrease, keeping the balance. That's where you studied, guys. Debit, credit, right? I remember that. Once you finish analyze, what's next step? Journal. We record. Journal is the one and only official way to record business transaction. But we also learn super tool can help journalizing. What? T account. You can verify your transaction, your journal by using T account as well. Super tool. You can save a lot of time. You can avoid making mistake. Once you make a journal, what's next? Update. We call posting. So let's post it. What's next? Update. Trial balance. Include all the accounts company has. List of accounts. So once we have trial balance, we are ready for what? Preparation of financial statement. You all know that. Good? But from the first version of trial balance, some numbers are not enough to publish. That means not accurate enough, not correct enough, like prepaid insurance and insurance expense. Like the value of equipment, value of long-term assets we purchased in the beginning of period. The value is not the same. So we decided to analyze again to correct the numbers from the first version of trial balance. This time, when we analyze, this time, we do not analyze business transaction itself, but we try to find out if there's something already incurred but not recorded. Accruals. Or if something's already recorded but not done yet, we call prepayment. If there is any accruals or prepayment we have within the first trial balance, we need to adjust. That's what we call this step as adjusting entry. You remember that? As I said, one and only way to update any financial information. What's next? Journal. That's why you guys were asked to prepare for adjusting journal entry. That's the first challenge of accounting student. Somebody mentioned that. I was really happy when I saw that. Adjusting entry preparation, that's the first challenge. Because 80 to 90% of accounting term, that's the same as your daily activity. But 10 to 20%, that's not exactly the same. One of them is adjusting entry. Within our daily life, we do not apply accruals or prepayments. Anyway, once we analyze if there is any accruals or prepayment in the field, we call also deferrals. Then journal. Your journal update what? Ledger. Your ledger update what? Trial balance second. What's the name? of second version trial balance?
Adjusted trial balance.
Thank you so much. Adjusted trial balance. So first one, automatically on adjusted trial balance. Once we have adjusted trial balance full of numbers of the company has, then that's accurate enough now, that's reliable enough now. So we are going to start next step. What? Preparation of financial statement. Which financial statement first? Once we have, that's accounting cycle. So we're done with 3 major financial statement out of 4. We're done. See? Business transaction made. We analyze and record it. Once we have financial statement, now we are able to what? Communicate with our users. That's accounting. No more than that. So we done for the accounting. Almost. When I say cycle, accounting cycle, we are repeating. So we are done for the past events. But cycle means we need to prepare for the coming period as well. You agree? So we need 2 more steps to prepare for the coming period. As you already know, what's next? Somebody said already.
Closing entries.
We need to close all the temporary account. Temporary account means what? Only for the period. We not going to update from period to period. Once we start new period, we gotta start from the 0. So temporary account means any account in the income statement plus withdrawals, drawing. You remember that? So first step, kind of revenue. Second step, kind of expense. Third step, income summary, right? Virtual account as well. And then the last step, we close drawings. So we close all the temporary account, and at the same time, we update temporary performance to the permanent account, Alex Capital. You remember everything? So closing, once we have closing, what's next? Post-closing, trial balance. That's full accounting cycle. Doesn't matter size of the company. Every single period, we repeat from here to here. Again and again and again. That's what we call accounting cycle.